Now, in the last part of our Crypto Crazy Week, we look at what allure cryptocurrencies have for mainstream investors. Travis Kling is the founder and chief investment officer of Ikigai Assessment Management. He spent 10 years in traditional finance at leading institutions. Last year, he left that world to focus solely on investing in crypto. Julia spoke with Kling and asked him what got him into it in the first place.
I'm not really a tech investor by background, and I'm not really a tech kind of guy. I don't own an Apple Watch. I think Alexa's big brother. I've always kind of been like that. So, you know, I saw Bitcoin pretty early, not nearly as early as some people, but around when the time Silk Road got shut down in late 2013. And then in early 14, Mt. Gox got hacked, and that was sort of confirmation to me that this wasn't really an investable asset class. So I stopped paying attention to it in early 2014. And then fast forward to the back part of 16, the price started going back up again, and it popped back up on my radar. And I started doing more research, and then all Ethereum and all the ICOs in early 17, those started going crazy, so I started doing more research around those. As I was doing that period of self-study, I just kept coming across revolutionary concept after revolutionary concept. And collectively, over about probably 500 hours of self-study in the summer of 2017, convinced myself that that this technology was going to be the most important innovation since the internet the first time around, and as such was likely to be the most significant investment opportunity of a generation.
Why? Because I feel like up until that point, what was going on, whether it's in cryptocurrencies or in the underlying technology here, was something very separate from what was going on in the rest of the world. And I do feel like right now it feels like we're in an intersection where we talk about cryptocurrencies in particular in relation to what's going on as far as monetary stimulus, a lack of fiscal stimulus perhaps from governments. It's like the intersection of the two things are tied, particularly now.
Yeah, so now is an incredibly interesting time from a global macro perspective, and it also is to borrow a phrase from the Old Testament, it appears that crypto has been created for such a time as this, with what we have with monetary and fiscal policies from central banks and governments, big tech overreach, government overreach in general, data privacy issues that are coming to the front and center of the sort of collective consciousness, and specifically with Bitcoin, and maybe we can put sort of Bitcoin in one bucket and put all the other crypto assets in a different bucket. Bitcoin has gone through a number of different sort of identities or phases over its 10.5-year history, and I think part of the confusion that the sort of average person has with understanding Bitcoin and other crypto assets is because of these evolutions of identity. So just to be clear, Bitcoin is a non-sovereign, hard cap supply, global, immutable, decentralized, digital store of value. And that's a lot of different adjectives, but all of them are very important. And what that leads us to is it is a hedge against monetary and fiscal irresponsibility from central banks and governments globally.
You're basically saying actually that at a time when it looks like some of the biggest economies and the central banks in those economies are enacting a race to the bottom as far as their currencies are concerned, pushed by stimulus to support the economies, actually cryptocurrencies like Bitcoin offer a better, an alternative source of protecting your wealth? Is that what you're saying? Because you use the term hedge there, which is an interesting way to describe them.
Yeah, so the way that I think about it is it's apparent that major central banks are all racing to devalue their currency faster than everybody else. And if all these central banks are doing that at the same time, what are they devaluing against? They're devaluing against things that have provable scarcity. And gold has provable scarcity. Bitcoin has even more provable scarcity than gold. In Austrian economics terms, it's the hardest money in human history. And I understand that it's not sort of bite size for the average person to understand this. You have to understand some amount of cryptography and computer science and game theory and sociology and governance and mechanisms. There's a lot of things that you have to understand, but simplistically, it is an insurance policy against monetary and fiscal policy irresponsibility. And it's apparent that the world needs that more today than they did yesterday, and they're going to need it more tomorrow than we need it today based on what central banks and governments are doing.
We spent a lot of time talking about Bitcoin. What do you think of some of the others? Because from what I've seen, particularly on social media, there is a great deal of, let's call it enthusiasm about XRP. There's a great deal of enthusiasm from certain quarters about things like Ethereum. What do you think of each of these, and what do you actually trade here?
Yeah, so at Ikigai, we consider the top 150 cryptos by market cap is our investable universe. We have that universe divided into sectors and subsectors that kind of look like the S&P 500. So there's many use cases for distributed ledger technology. Money is the killer app for distributed ledger technology right now, specifically store of value. And people, I think, some people try and put a knock on Bitcoin that it's too slow to be very good for payments right now, to be used as a method of exchange right now. And my argument there is Bitcoin is too good at being a store of value right now to be a good method of exchange right now, because nobody wants to be the Bitcoin pizza guy that spent 10,000 Bitcoin on a pizza. And as the price increases over a number of years and the volatility decreases, which is certainly our expectation, it's going to be better for a method of exchange. But in the meantime, it's a great store of value.
So your messages to people that are perhaps looking at this, maybe they've dipped their toes into Bitcoin, maybe they're thinking about it, it's a good time to invest right now, and don't spend your Bitcoin if you've got it on a pizza.
Yeah. I mean, look, that's exactly right. I mean, they're making it increasingly easier to spend Bitcoin, and that's great. But then you look at like all of the centralized method of exchange crypto projects, and Libra is a great example of that, right? And specifically in the United States, like 2 years ago, like in the summer of 2017, we thought that Bitcoin's sort of use case for the world was so that Americans could buy cups of coffee, which is like really silly, right? Because we have a really great method of exchange system right now. I mean, look at Venmo, right? Like Venmo works awesome. And in WeChat, I mean, in China, you have WeChat and Alipay, and those are sort of proliferated methods of exchange there. Libra's trying to run at that same use case, but all of those are backed by fiat currencies that central banks are racing to devalue as quickly as possible. So however easy it is to use WeChat and Alipay and Line in Japan and Kakao in South Korea and Libra and all these things, the underlying currency that you're still using to spend there is still these fiat currencies, which over time are going to prove to be an inferior store of value relative to Bitcoin.